Sector, we're looking at the latest developments in the sector, how this has affected liquidity and access to credit by customers, and how the Central Bank of Nigeria's moves have actually successfully sustained and sanitized the market. And I still have with me in the studio an economic analyst, Kola Ogunleye. Thank you so much, Kola, for sticking around.
Yeah, thank you.
Well, just before we went on break, we talked so much about how the banks have been trying, or should start trying now, to ensure that retail banking is now more of their focal point than focusing on the public sector funds, as we know that the central bank is trying to reduce. But now let's really look at what some of the things that they mentioned in their meeting. That's the Bankers Committee, was that they need to take more steps to improve funding to small and medium-scale enterprises. How optimistic are you about this?
Yeah, if you look at it from the point of view of what is going to happen almost immediately when the transmission mechanism completes its cycle, in terms of what has happened now,
as regards to cash reserve requirement,
money is being taken out of the system. We need to now encourage depositors. You have to entice them with higher interest rates. And then, of course,
higher or lower interest rates.
You have to entice depositors with higher interest rates.
Okay.
But that will necessarily lead to higher lending rates, because what is a bank? A bank is an institution that makes profit from the margin between its lending rate and its deposit rate. If I take money from you at 14%, there's no way I will give it out at less than maybe 18, 19. You must be a prime a borrower to get that kind of a prime lending rate. So what we are trying to say is that the immediate impact of this development will be, one, to lead to an increase in lending rates. Two, probably after a while, douse the tension in the volatility in the exchange rate market. Because one of the key reasons for this move is that banks no longer do what they are supposed to do. They merely trade in foreign currencies, because they have a lot of money sitting in the tilt there, and they don't want to give it out. So what happens? There's a window through which they do that at the exchange rate market. And the central bank said, no, we've got to put a stop to this. If these monies continue to lie with these people, we will not, because the amount of naira that will be chasing the dollar, and don't forget that we also have issues with our dollar earnings as a result of theft and other activities on that side, as the Minister of Finance said recently. So when that quantum is reducing somehow, and you have a lot of naira that is chasing the little that you are putting into the market, what happens is that the exchange rate goes up. And that's why they said, okay, we'll take it out of their hands. But the immediate impact of that is that their deposit rate will have to go up, because when they come to someone like you now, with your few thousands, they want to entice you to bring it to their bank. Savings rate will go up, deposit rate will go up. That's not too bad. But the implication of that again is that the lending rate will have to go up for them to sustain profitability.
So that means they cannot improve lending.
Now, lending to SMEs will have to come through another window. I think the central bank is trying to do some things on creating development institutions, like development banks, mortgage institutions and all of that. I think those are the places where we can begin to look at supporting SMEs. I'm happy to say that attitude towards agriculture has changed. From less than 1%, they are now doing less than 4% lending to agriculture. We can still do more. If you look at the composition of agriculture within the GDP matrix, then it is important for us to devote more funds to that sector. And I think we have a very good Minister of Agriculture at the moment who knows what he has to do, and is just doing that. So he needs a lot of support, because that's also part of SMEs. The small-scale farmers have to be encouraged. Their cooperatives have to be funded properly. Let them get them all the inputs they have, so that at least we will stop importation of food. That's one. Two, in terms of small-scale industries, how do you ensure that they get rates that are reasonable for them to be able to do their business? And now that is the problem with the current policy. And that's why they say that economists always talk with two sides of their mouth. You know, in one hand, you are talking about this thing encouraging.
What policy are we talking about now? Is that the cash reserve requirement?
The cash reserve requirement.
Deposits?
The cash reserve requirement, which is also the public sector deposit. They have targeted public sector deposit now, in addition to the normal cash reserve ratio that we have, to say that 50% of all public sector deposits should be withdrawn. Okay, the implication of that is that there's less deposit, there's less money. Although fine, we may say that they use that part of that money to trade in the exchange rate market, but that's not the only thing they do with the money. That's also part of the money they use to do their business, other businesses, financing, trade, and all of that. So the lending rate, which is a key rate within the matrix of rates that are available in the market, is likely to go up in the near future. How do you help SMEs? The central bank should continue its activities in terms of those development finance institutions and liberalize access to those funds such that it will be, and then the literacy, financial literacy unit of central bank should do more work so that more people know that certain funds are available, where they are available, and what they need to do to get it.
Well, in all of this, the Central Bank of Nigeria recently discovered that billions of naira in excessive bank charges, he actually discovered it in banks. Now, what's your take on this, especially as there was no mention of sanctions?
Yeah, we've talked about, earlier on we talked about governance. I also spoke about regulation. As far as I'm concerned, we are beginning to see some level of serious regulation. And the legislature still has to do more, because most of the regulatory environment is governed by legislation. Malam Shanusi cannot just do anything. He has to look at the Central Bank Act and the financial and other banks legislation. So those are the two legislations that direct what they are capable of doing. In terms of these excess charges, this thing has been going on for long. Do you know that some chartered accountants have specialized in that as we speak? The only thing they do for their customers is help look into the bank statements and discover excessive bank charges. Why does this practice continue? There are issues of integrity here. When you approach a bank and you are dealing with a bank, there's a minimum level of expectation that you are being served by people that are of integrity. But when people begin to fiddle with the computer systems to introduce excess charges because the customer does not know, or because the customer is not in a position to know, or because the customer does not have to know, that's bad for the system.
Going forward now, how can the Bankers Committee continue to support the economy to grow better?
Yeah, the Bankers Committee is just like asking a question, what can banks do? Because the Bankers Committee meets regularly to review some of these policies as it affects them and all of that. I think their job is cut out for them already. Now, no more deposits from the public sector. It might be just a single decision, but it's a decision that is of far-reaching consequences. The way they started is to say, make generous provisions when you lend money to the public sector. Now that they have gone to the base of it to say that deposit, and when they do that now, they will support the economy more by engaging in more retail banking, by reducing excessive charges, by introducing better governance, and of course, ethical behavior in the banking system.
Well, thank you so much, Kola, for sharing your thoughts with us this morning on the program. Thank you so much. Well, we've been speaking to an economic analyst, Kola Ogunleye, and we've been taking a look at the banking sector, latest developments in the banking sector, how this has affected liquidity in the system, and of course, how the central bank has increase its moves to sanitize the banks. But just before we go, let's take a look at some corporate actions. Red Star Express, after declaring a 1.9% increase in its gross profit, is proposing a 32 kobo per share payout to investors, and the payment date is September 19th this year. The company will also, on the same day, that's September 19th, hold its annual general meeting in Lagos, where the company will give a scorecard of its achievements and challenges in the period under review. And any other business arising. Or Continental Reinsurance PLC has also decided to reward its investors with a dividend payout of 10 kobo per share, and the payment date is September 19th this year. Before the dividend payout, however, the company will on September 18th hold its annual general meeting in Lagos, where the company will also give a scorecard of its achievements and challenges in the period under review. Well, that's the program for today. Thank you so much for being a part of it. I'm